absolutely nothing. This is nothing. This is nothing. Times like this is where I like going down to the range bar chart. And here's the example we had yesterday. Now the range bar chart is just a different type of chart. There are tick charts and time-based charts. Your time-based charts are the ones that are based off of time. So a 10-minute chart, you get one candle every 10 minutes. A 4-hour chart, you get one candle every 4 hours. It prints on the time. Tick-based charts are based off of movement in the market. So for example, Remy, a range bar chart, it prints a candle every time the market moves, and it moves out of a range of 5 pips. So every single one of these candles you see on the chart are 5 pips. So it gives a little clearer vision of price action when the minute charts are given something that looks a little bit sloppier like that. So sometimes you can find hidden opportunity. If you guys remember yesterday, we had a nice opportunity here. We had taken a bearish bat formation, traded it down like a trend continuation trade, came all the way down to our bigger bat formation, right? And then popped back up. So it was a pretty decent trade on there yesterday. Maybe we can duplicate that today. Maybe we can duplicate that today. I know Lax, you got long earlier in this, Lax. I think you said. You can see a lot easier to kind of see the trend here on the range bar chart. You can see the pullbacks, trend continuation opportunity right here. You can also see potential pattern formations here. So if I take a look at this and let's label this my X leg, I can go swing low to swing high, X to A. Price action comes to a 50%. What should I be on alert for, guys and gals? Traders. Oops. There we go. Yep, at first a potential bat formation. Then when we see the break and close above A here, we know that we're on what type of alert? I don't know if the ratios will match up, but yep, we're on cipher formation alerts. Let's take our Fibonacci extension from our X leg to our A leg, back down, and you get that. We hit our 127 extension, giving us a valid C leg. We know that our decompletion is at the 786. So if I just take my little line tool and I do a little bit of that, and I do a little bit of this, we've got a bull cipher, potential bull cipher formation here on the pound dollar range bar chart right at 145.42. Now, there's something else here. Do you guys see it? Another potential pattern formation that is setting up. Chris, this should be right up your alley. I'll give you a clue. I don't trade, nor do I like this this pattern formation. So let's get on to the 4-hour, where again we're looking for a pullback in the structure. That's what we're looking for. We're looking for a pullback in the structure and a chance to get short on euro yen. And if we head down to our 4-hour chart, we are setting up. We talked about this level. We talked about 2 levels yesterday. This was the first level. Up here was the second level. Didn't get a chance to enter at the first level. Maybe setting ourselves up for a chance to enter at the second level. If I do something like this, put an X leg right there, take out my Fibonacci retracement, go swing high to swing low. You can see that we hit our 50% retracement. A 50% retracement puts me on alert for what type of advanced pattern formation? Batman, right? Potential advanced bat formation. Break out the cape. Break out the cape. X to A, A to B. B to C, looking for a CD completion up at our 886, which is going to be 123.80. But potential bat formation here, 123.80. If you look left, this is right in the higher zone we were looking at for our potential short opportunity. This is one of those opportunities. We don't talk about this too much because I find when I do, traders try to do it. without really thinking about it. We had a conversation about this on Monday's Q&A session, right? Was it this Monday? Transformation members? I think it was Monday. About using advanced patterns and shooting for extended targets. This would be one where it may not be a bad idea for you guys that are longer term traders, because you have your bearish advanced bat formation lining up with an overall bearish continuation move. Again, do it at your own risk. Remember the conversation we had on Monday. But this would be an example of that. What do we have now? We had the Gartley formation earlier in the day. One of our traders found. Looks like that busted out to the downside. You can look for trend continuation here as well, and with anticipation that we're going lower. So a retest of structure and a chance to continue down. But with about 20-something minutes left, I don't think we're going to get that for our day trading day. Let's go to the range bar charts as well. Okay, dollar again. Different looking idea here. Kind of saw this on the pound yen yesterday. We're looking at trend continuation, maybe back into this level, this 107 even level. There's going to be a first chance aggressive opportunity right in here. Right in there if you're a trend continuation trader. Do we have any trend following traders here? Meaning that traders that look for the extension past previous structure for targets? Dan says, how about something exotic? I don't even think I have access to that pair. So you're on your own. I'm not going to be able to look at it. I'll say this, if you're a trend following trader, the difference between trend following traders, trend continuation traders, we're going to look for targets at a retest of structure right down here. Trend following traders, you're going to look for an extension, say something like the 127 extension. If you're a trend following trader, this is not a bad opportunity because you're looking for a move down to your 127 extension. If you can get involved anywhere in this area, you're looking at a reward of about that. You're looking at a risk of about 87, a minimum about here. If you're a trend continuation trader, not going to be as good because you're only looking at a reward of about right down here. So you're basically at a 1-to-1. So if anyone's a trend following trader, I'd eye up this opportunity for potential short. Maybe watch for that RSI to go overbought and then look for that lower low, lower close entry. If not, you may have to wait to the next level, which is going to probably be this 107 even handle. Looks like a 1618 inversion there. Yep, 1618 inversion up at a 107.02. So again, range bars given different perspectives. Sounds good. Let's take a look on the 4-hour chart, see what we have here. You see a little consolidation here, and then we break out to the upside. Let's switch these DSRs a little bit back to our daily. And we have some news coming out at 10. We have crude oil coming out at 10:30. I think there's some news coming out at 10 as well. Here's your daily DSR level. So if you're looking for a short on the lower time frame, a low risk short, you're looking for a move up to 74.50s. So if I'm looking for a low risk short here, this is the area where I'm looking to get involved in. Right in here, right in here. Let's go down to our 60-minute chart. See if we can do any more analysis on here. Let's kind of zoom things in a little bit. I think we can. I think I can. Do you guys see anything? Ooh, I see it. I see it. Do you guys see anything that may be lining up in this level of resistance? Again, this is our structure zone from the daily. Yeah, there we go. Look at that. Possibly an ABCD pattern. Maybe a little short, but let's see. Copy and paste. Oh, a little bit short. I thought we have a double one lining up there. A little bit short. We do have the smaller one up there. There you go. So you've got one ABCD pattern right here, a little bit lower. You've got a smaller ABCD pattern right there. Maybe some fib confluence as well. Not going to have a fib inversion, but right idea. gonna be a little bit, well, maybe from a bigger one. But let's take a Fibonacci extension, swing low to swing high. See where our 1618 comes in at. Right at those highs. CTS traders, you're sitting back counting your score. Fibonacci extension from our smaller ABCD pattern. Another 1618 right up there. Let me just take one more look back out on 240. You know what, Ron, you may have this actually. From our previous move here to our breakout. Nope, that's going to be high. You may have a 127 from there. 1414, so nothing too big. Minor one. I don't really care for the 1414 too much, but it's up there if you want to add it. So if you got some Fibonacci confluence up there, you do have an ABCD pattern up in that level. So if you're a trader looking to get short, you're starting to build your case for entry. So again, CTS traders, you can go through your score, give yourself 2 points for this, give yourself 1 point for that, give yourself another point for that, and make sure you see what is the minimum score. Do I need a minimum of 4? Do I need a minimum of 5? Do I need something like, hey, Akil, it doesn't matter what the score is, I need the RSI to go overbought. But this is the time where you want to start asking yourself, what do I need to occur at this level in order for me to take the trade? And then also, what else is crucial that we what's another crucial question that we always ask ourselves before ever involving ourselves in a trade? I'll give you a clue. It's my time zone. It's my time zone. Also, keep in mind, interest rate decision tonight. So you may not want to be involved in this, but this is good for educational purposes. Entry stops targets. Entry stops targets. Entry stops targets, right? Rule of threes. 3 things. Entry stops targets. Testable, verifiable, repeatable. Trader mind map stuff, guys. Trader mind map stuff. Right? So if you're looking to get involved in this level, then where do stops need to go? I think this is the easy part. We can all agree where stops need to go, right? I do not trade the CTS. I use it in my analysis. I do not trade a score anymore for it. I've evolved past that. CTS is great because it provides you structure. It teaches you how to analyze the markets the same way each time. But eventually, it keeps you consistent, too, for structure trading, which is kind of difficult. There's a lot of subjectivity in like price action and structure trading in comparison to advanced patterns. But eventually, as you get better, most traders outgrow it. They still use it for analysis, but they don't sit back and dial up a precise score. But yeah, stops need to be above this level of structure, right? So let's just take let's just say 54, let's say 70s, right? 70s, right? Is where stops need to go. And again, these are just guesstimations. The next question you have to ask yourself is, okay, if I'm going to enter a trade up here, then where am I looking for targets at? So how about you guys find some targets? The CTS is something that we teach in our training course, Abdi. Yeah, we have training courses that teach all of this stuff. And I do not mind shamelessly promoting them because they are well worth it. Chris Nuno says 69.50s. 69. Where am I looking at? 69.50s. All right. I'm guessing that's previous structure, right? Previous structure. Chris says 70 even. 70 cents on the dollar, right? Previous even handle number. Got some structure there as well. And this is the part, guys. There's no wrong or right answer. This is the part where you want to get your brain thinking. This is the benefits of having a live room community. It's not that you get to hear my beautiful voice for 3 hours a day. I know that's great. We know that's great. But you get to see how other traders are looking at the market, what other traders are thinking. and you get to learn and hopefully spark some new ideas from that. You know, you have someone like Duncan just typed in, hey, I'm going to take target 1 out of 3D2 retracement from the bigger ABCD or the smaller one, Duncan? The bigger one. So Duncan's doing something like this. Fibonacci retracement, swing low to swing high. Let's say we enter right in the middle. His target 1 is going to be the 3D2. His target 2 is going to be the 618. Many of you may not even have thought of doing that. You're like, oh man, that's a good idea. Maybe I should try that. Now, boom, now you write it down. Now it's something you can go back and test. Maybe it's something you can add. That's the beauty of having a trading community. More minds, more thoughts, more ideas from quality traders, not trading form trolls. Communities, it could be great things, especially with the amount of support. It could be great things. The problem is most of them just get ruined. Communities make everyone better if they're done the right way. So, again, stops, we can all agree, above previous structure highs. Targets, this is the next part you want to line up. And I like physically drawing it on. Measure out your risk reward. Physically draw out your risk reward. If you're a Ninja Trader and or TradingView has it too, you can use the little deal that gives you the red and green thing, or you can use this little ruler and just say stops 25 pips versus potential targets 47 pips. However you want to do it, but you want to make sure you do that before every trade, just to make sure that it's a trade that you can actually involve yourself in. Jane says, Akil, I want to ask something about backtesting. How many trades might we backtest a minimum for a strategy? I would say either 100 trades per pair per strategy per time frame, or 5 years worth. It's going to be difficult to get 100 trades on, say, like a 60-minute or like a 60-minute chart and above. So 5 years is probably is going to be enough. You should be able to get like at least like 60 out of 5 years, depending on what you're trading. Hey, take care, Duncan. See you tomorrow. All right, let's go down to our day trading time frames on Kiwi. And then, man, we're due for a break already. So let's go to our 15-minute chart. Akil, do you think just pattern trading on 5 pairs hourly time frame can be enough? I think it could be enough to trade a single pattern on a single time frame. For you to trade one advanced pattern formation on 1 pair is enough. As long as you're doing it good. If you're executing your plan consistently, yeah. If you're not, then no matter how many or how little pairs you trade, it's not going to make a difference. Be good at 1 before being good at 2. Currently watching the DAX for a short trend continuation trade at the break and now retesting structure in the 5 minutes. See if I can bring that up. TradingView gets a little weird when I do this. newtradingview.com. TradingView's been mean to me lately. Man, so many mean people over here. Let's go to, here's an example right here. If you guys can see it, look at this. Is that going to be, Darren's probably eyeing this up. It might be, right, Darren? It just might be. I think we're going to be a little bit short. I know it's getting choppy. Oh, look at that. Hold on, let me reload. Perfect example. It's like I knew it would happen. Look at that. As soon as I load up my charts. You guys see what I see? Boom. What's that? Cipher. Looks like target 1s and target 2s hit on that. And maybe setting up for a potential bat formation as well. It's like we knew it would happen. Let's actually see here. No, this is an index. I looked at it. We had a it was a former 12-week transformation member that traded it, so he would often ask questions about it. I just started taking a look at it. I just like I like just looking around charts, guys. I'm a big student. I'm a big student of the game, so I randomly like to work on my skill of trading. So what I do is I go to random charts. I'll even go to stock charts and just randomly do technical analysis just to stay sharp. Imagine you heard the stories about how Kobe Bryant used to sneak into the gym early before practice and take some shots, or a player would stay late after the game and with his quarterback and catch some balls. That's me. After I do my top-down analysis, if I don't see anything that's really too appetizing, I like to go through some charts and just practice making predictions. Trading is a skill, and I think with especially when I don't get to work on my skill as much as I would like. So I'm always trying to throw in little moments when I can. Here's the dollar yen we talked about earlier, guys. Look at that. There's your lower low, lower close. You can see the example of how a trend following trader, you still have the risk reward to make it work, right? Where a trend continuation trader, now you're just barely getting that 1-to-1. You're not even getting a 1-to-1. So you'd have to wait for a higher level of entry there. But if you're a trend following trader, here's your lower low, lower close. You can enter right there at market and go for that 127. Doesn't some Forex pair follow this? I don't know. I don't believe in anything following anything, so I'm the wrong person to ask about correlations. You guys know my view on correlations. Yes, correlations exist. They also change. So I don't even get into stuff like, I got into a conversation with someone the other day about looking at the dollar index and making judgment decisions based on what the dollar index is doing, making judgment decisions off the pairs I trade based off what the dollar index is doing, because the dollar index measures the dollar's strength or weakness versus a basket of currency pairs. And I just don't buy into that stuff. I don't buy in and looking at the dollar index and saying, hey, the dollar index is bullish, therefore I can only get bullish in the market with dollar pairs. It's just, I believe in the individual battle. Again, if the Cowboys, just because the Cowboys beat the Falcons, right? And just because the Falcons beat the Giants, that does not mean that the Cowboys will automatically beat the Giants. It's about the individual battle, right? Put it in soccer terms, right? Just because Real Madrid beat Atletico Madrid, and because Atletico Madrid beat Barcelona, does not mean Real will beat Barcelona. Right? It's about the individual battle. That's my opinion. Again, I get eaten alive every time I say stuff like that. I can care less, because opinions, I don't want to say they can't be wrong. Sometimes they can, but opinions are opinions. They are views like anyone else. And there'll be someone out there that loves correlations and they'll tell you how great they are. You know what? They're not wrong either. There'll be a fundamental trader out there that tells you how fundamentals are the end all be all. And guess what? They're not wrong. There are technical traders that will tell you the chart is the only thing that matters. And guess what? They're not wrong either. And should we care? I don't care. All that matters is, guess what? All I care about is this. I'm very selfish. All I care about is, can I be consistently profitable? And no matter what anyone else thinks, that doesn't affect my profitability. I don't care what any Joe Blow says out there about, what they think is going on. It's not going to affect my profitability. So I don't get upset over it. I don't even argue about it anymore. I don't care. I used to care a lot. I used to take pride in being a chartist, right? I used to take pride in technical analysis and letting people know, no, it's got to be, this is why the technicals rule, right? And I do believe technicals rule, but I used to try and switch people's opinions. And then I woke up one day and I said, why? Why? If Johnny wakes up thinking fundamentals rule the earth, does that make me more or less profitable? No. So stop wasting energy on it, Akil. So correlations do exist, but they change over time, so you have to be careful with that. My opinion, Akil, in your opinion, which is the best performing pattern at the moment? How would you define best performing, Phil? Highest win percentage, most opportunity, most pips, most average pips? How would you define best? Most profitable? I'd say the cipher formation. Mainly because it occurs the most. It's most frequent. I probably get about 2 cipher formations for every other pattern formation that I find. So, we're putting double the coin in the gumball machine. Wisdom says he's long the dollar yen cipher. Any tips to a new trader in the room? Yes. And it's hard if you're going to be here in the room, but don't focus on trading opportunities. Focus on learning the skill of trading. That is the best advice I can give you. It was one of the biggest mistakes I made. So many new traders focus on how can I find buying and selling opportunities. Basically, how can I make profit? How can I make money? What strategy works? Take a step back. Before you focus on that, focus on the fundamental skills of trading, which is how to read a price chart. How to tell if the market is bullish or bearish. How to tell if we're in a trending state or a consolidating state. New structure high, new structure low principles. Master the basics. Again, imagine since we're on the soccer conversation, instead of just running on the field and looking to play, right? Spend some time on the training ground. Do the little thing where you're standing, 5 yards apart and just practice trapping the ball. Practice dribbling the basketball. Practice being in the batting cage with the baseball bat. Build that foundation first. And once you have that sturdy foundation, it's going to be a lot easier to become a consistently profitable trader. If you don't, what usually happens is you'll end up going back to that at some point. So you might as well not waste the time. I've wasted over a year of my life going backwards and restarting. Don't waste the time and just do it right from the beginning. It's going to be slow. It's going to be monotonous. I tell this to our transformation members all the time. They've got to go through week 1, 2, 3. CTS is week 5. They got to go to week 5 before they actually learn how to put stuff together and trade it. 5 weeks of learning. And it stinks because they spent all this money. They invested this money in their education. They're fired up. They know this is going to be the difference maker. They want to trade. And then someone's telling them you got to wait 5 weeks. But I promise you, if you take those who take their time and go through it the right way, that learning curve when you get out is a lot shorter than those who have to retrace and go all the way back.